Hi, I'm Richard Terrell and I'm one of the owners of Growth Strategy Partners. We're investors who have been buying short sales through agents for quite a while now. I'm sorry that you're going through this very difficult time. I'm sure that you've been beating your head against the wall trying to get a loan modification or some other help from your bank to keep your home. Well, we may have a wonderful solution for you. If you're watching this video, you probably want to stay in your home, and you and your agent probably believe that you could qualify for our mortgage restructuring program. With that mortgage restructuring program, we buy the note from your lender, not the house. We buy the note from your lender, whether it's B of A, Wells Fargo, whoever it might be. When we own that note as your lender, we then reduce that new mortgage to that old mortgage to the current market value, and we give you a new 30-year fixed mortgage, and you would pay that payment just exactly as you normally would. Now, we can't guarantee that we're going to be successful with every one of our lenders, but we have been very successful. We have purchased over $1.5 billion worth of non-performing loans over a period of time of more than 20 years. Our money is made by buying that note that your lender holds. We make a profit on the difference between what we buy the note for and the new restructured note that you have. And what we do is we will then give you the brand new note, and we will make money just like any lender does when you have a performing note and you're making your payments on a monthly basis. We won't ask you for any money for this except for hard costs that we need to have in order to get your note purchased. Costs like appraisal fees, accountants, attorneys to submit this to the bank, etc. Preparation of documents and administration fees for those submissions. We'll give you the exact numbers a little bit later. Here's how we do it. This industry is changing day by day. The banks are getting tougher to deal with in some ways, and they're getting easier in others. One of the things that is changing is that the banks have become more willing to work with us to purchase pools of non-performing notes. Now, your loan is what is referred to as a non-performing note. You're behind in your payments, and that note to the bank is worth less because you owe more than the house is worth and the payments are behind. That note is obviously not as valuable to them as it used to be. We and our affiliates have the 25-year history of purchasing those types of notes from the banks. And what's changed recently is that the banks are now willing to be able to help to allow us to pool together a group of those notes that are non-performing and submit it to them so that we are able to purchase it from them. So here's what we do. We identify many homes, just like yours, throughout the United States. We combine those homes together into what we refer to as a pool or a bucket of these notes for each bank when that is large enough so that we can take it to the bank and buy all of those notes. We are dealing in amounts of $10 to $20 million worth of notes at the minimum. We document all the values, all of the hardship, etc., and we submit that pool to the bank. We then complete that purchase in usually 90 to 120 days from the time that we get your note to be able to submit it. At that point, when we bought it, now we own the note. And again, we own the note, not the house itself. The ownership of the home always remains with you. It never changes that. It's just like you've probably had happen in the past where your bank has notified you that they no longer have your note. It has been transferred to someone else on Wall Street and they now own your note. It's exactly the same thing. We then become your lender. The only difference that you'll see is that we're a lot nicer than the bank, but we will be that lender. Now, as the lender, we modify that note, which means we reduce it to the current market value, and we give you a new 30-year fixed mortgage. And you make payments, as you normally do, under the terms that we have agreed to. Now, we will attempt to negotiate your second liens if you have them. We make no guarantees that we will be able to do so. Since we don't buy those liens, we can't guarantee that we can reduce them, but we'll do all in our power to negotiate them if that's what you wish us to do. Now, hopefully your agent has helped you determine, or will help you determine, whether or not your home qualifies for this plan. Not every home will. In order for a home to qualify for the plan, they must be at least 20% underwater, meaning that they are worth less than what is owed on them. It cannot be a FHA, a VA, a Fannie Mae, or a Freddie Mac loan. And the reason for that is that the banks do not have an incentive to sell those because they are guaranteed by you and I as taxpayers and the government, so they don't have an incentive to sell those loans. Now you must also provide full documentation so that you qualify financially with less than a 40% maximum housing ratio. Your agent can help you figure out exactly what that is, but it's calculated as your PITI, or principal, interest, taxes, and insurance, plus your HOA divided by your gross income. Now, your FICO score or your credit score does not matter in this situation. Now, if you qualify on those three issues, we can move forward, verify your information, and submit it to the bank. What we need is authorization from you to negotiate with the bank, and we need the typical short sale or loan modification hardship evidence. W-2s, tax statements, paycheck stubs, all of those normal things that I'm sure you're already aware of, having tried to work with this type of situation. We need to know whether there's a notice of default or a notice of sale, any BK filings, etc. Your agent, again, has all of that paperwork that's necessary. Cash needed for this are in two places. Upfront, you will need to provide $1,650 for the first loan and $595 for any additional seconds or thirds that you want us to negotiate. The purpose for that is to pay simply for the hard costs that are incurred in order to do this. It's cost for an actual appraisal. It is an outside accountant verification of your income and your employment. It is the attorney preparation for the submission to the bank. It is all of the documentation and all of the administrative work in order to submit it to the bank. Now, that money is fully refundable if your home does not qualify to be submitted to the bank. Now, submission doesn't mean that you're necessarily going to absolutely be accepted. We incur almost all of the expenses before we submit to the bank for purchase of the note. It may be that the bank turns us down for some reason or another, and if we've gone through all of the work to get the note purchased and we are denied, then those fees are not refundable. Now, in addition to that upfront fee, you will have to come up with cash at closing of the escrow. You're going to have to bring all of your back real estate taxes current, your HOA fees current. You're going to have an impound account, which means that your taxes will have to be impounded, insurance impounded, etc. And you will have to have several months, a couple of months payments done for this in escrow. Now, that's going to be several $1,000s that is going to be necessary at escrow, so you want to make sure that you have the cash to be able to do that. All right, now if you qualify, we buy the note, we reduce the principal and offer you a new loan. What are the terms on that? Well, the terms is that it will be at the current market value based upon an external appraisal. There are impounds that are mandatory. There is no prepayment penalty on it. You will have a 30-year fixed mortgage, and the rate of that is based on 5.5% above the current Wall Street prime. Now, as of April of 2010, Wall Street prime was 3.25%. So the total of that is 8.75%, which would be the new fixed rate for the mortgage. And that rate is established at the time of close of escrow of that restructuring. Okay, another caution. Again, we can never guarantee that we will be able to buy the note from the bank. We and our affiliates have been buying for years and have established relationships with the banks, but the banks are always changing and the market shifts under our feet constantly. Also, and this is a big deal, we do not postpone trustees' sales on your home. The people we work with are not even in the same departments as the people that are involved with trustees' sales. So you must work with your bank and your agent in order to be able to avoid that trustees' sale. We recommend that you continue with any loan modification or short sale process that you're already into or contemplating. Well, that's it. Purchasing the note gives you and us a lot of advantages. We can help you stay in your house and start all over again with your mortgage and your payments at a manageable level. You can then reestablish your credit and be able to qualify for a new loan at a lower rate. Remember, there is no prepayment penalty on this new loan. Now, there are obviously individual details because every home is personal and unique. But ask your agent any questions that you may have. We are available to answer them at any time. We hope that we can help, and we look forward to working with you. Take care.